right? So now we'll move on to the commandments of financial modeling. So while you understood the process, and now you need to know the commandments and the things to take note of while building the model, right? So these are I've hinted at this initially. The first is you should understand the objective of your model. You should develop and agree the right layout. So are you having an input sheet? Are you having just one working sheet or two? What's the purpose of the model, and in what detail do you need to go into? And then is the model built in a way such that you can easily hand over the model to anybody? Right? Is it a model where once you build the model, once you build the model, is it so complex that nobody even understands what you did? Or is it built in an easy way such that someone can easily understand what you've built? Right? And then you also need to build in flexibility scenario cases such that in case prices increase by 5%, what happens? And then you need to structure it and separate the sheet. So your assumptions should be on the sheet, your calculations should be on the sheet, your output should be on the sheet, and then you need to analyze it properly. You need to understand the source of the assumptions you are putting into your model such that you can explain it, and then you need to audit your models to check you didn't make any error while making some calculations. Right? And then, so some key considerations while building a financial model, right? So I mentioned the commandments, I've mentioned the process. So what are some things you need to also consider? So you need to also consider what are the key business decisions. Are they building the model for budgeting purpose? Are they building it for capital raising? Are they building it for valuation? Are they building it to monitor liquidity? Are they building it to monitor profitability? So understanding those things will now help you understand what needs to be on the analysis dashboard, what detail they need to go into, what outputs are required. So they don't want to see the expected cash flow performance in the next 5 years, or do they just want to see the asset growth, or how they don't just want to see the profitability of the business, or they don't want to see how the revenue is growing? So understanding the output that is required helps you understand how to build your model. And then understanding the test, you need to also know what type of sensitivities and scenarios will be needed. So for example, they might want to know that, okay, we're selling our goods at 10,000 naira. Okay, let's say we decide to do a promo and sell the goods for 8,000 naira for 1 month or 2 months. What happens to our profit level for that 2 months? They might want to see that. So building that scenario into a model is also important. And then understanding what kind of variables should be in your input sheets is also important, right? So you need to understand the key modules that your model needs to break into, and then the level of the breaking. So to what detail you need to go into your model. You also need to understand that by speaking to the stakeholders involved. Another key thing you need to consider is what information do you have available? So do you have the historical performance or the historical financial statements? Can you speak to the management of the company and understand what they want to do in the next 2 years, the next 3 years? Having an idea of what information is available can then help you building the right detail of model and build the model for the right purpose, right? And then you also need to know how often the model will be updated, right? So are they building the model? Do they want to be updating the model monthly and changing? Maybe they want to be changing the price they're selling the goods every month, or maybe the goods is a seasonal good. Let's say it's a crop good that maybe the crop is available for 3 months and 3 months is not available, right? So you need to be able to build that. Okay, when it's not available, the price of the crops will increase. So you might need to increase the cost of selling. Right. So you need to understand that too. And you need to build a forecast for 3 years or for 5 years or for 10 years. You need to understand that. So I need to make sure the model is built in a very simple manner. Right. And then so I think moving on quickly. So I've been talking about what financial modeling is, the uses of financial models, how to build a financial model. So the next question is, why should you learn, or why should a person want to learn financial modeling? Right. So first, if a very important reason is a financial model helps you truly understand the fundamentals of business, right? So a financial model, as I explained, is you building a you turning a real life situation of a business into a model, into like a document where you show the key metrics, how they link together, right? And for you to be able to show them in the right details, you need to understand how the business is performing, how the business wants to perform, what are the key metrics to check to know when a business is performing well, and all those kind of things. You need to thoroughly understand business, right? And then it's learned by practice. You learn more by practice, right? So by learning about business, by learning about accounting, and then by practicing and building models, you're able to fully understand the fundamentals of business, and this can go a long way in helping you in your career if you're a career person, and if you own a business, right? Understanding the fundamentals of business helps you to be able to take your business to the next level in terms of growth and performance, right? And not fully understanding it just makes your business off, right? So today you just realize you need to pay your debts, and then your business does not have money to pay your debts. So you now need to go and borrow another money to pay the debt you're owing. And the money you borrowed now needs to be collecting interest. And you don't even have a way of tracking this number, right? Or the cost of transporting goods have increased due to increase in petrol or increase in transportation costs. And then you don't know by how much you should increase the price of your goods. And you don't know that if you increase the price of your goods, you might need to maybe give some incentives for a while, or maybe do some more sales and marketing, or give some. So those kind of understanding is where a financial model helps you to fully grasp, right? And then for people in the career world, understanding financial models helps you have a stronger foundation on how to value a company, right? So valuing it helps you understand how to value a company, helps you understand when you're taking a company to IPO, how is it done? What are the key things you need to understand? If your company is trying to issue shares, how much shares should it issue? At what price for the business to operate sustainably? If you are trying to carry out mergers and acquisition, how much is the right consideration that needs to be paid? And then if the company is involved in option pricing and all those kind of things, you need to also, a model also helps you understand that. And then for people looking to build careers in in corporate finance, investment banking, right? Financial model is a super skill that helps you stand out amongst your peers, and it gives you an edge in your career path and helps you fast track your career, because it helps you, because financial models are key tools used in M&As, used in private equity, used for equity research, used in business modeling, used in the startup world to understand the potential of a startup business, used for budgeting, finance control, amongst other uses, right? So a financial model is super valuable for people in the finance or investment banking, business consulting line, or people looking to enter those lines. A financial model is a skill that gives you the edge over your, your over others in your career, or other others in your industry. It helps you understand your business better and helps you make decisions that are backed by numbers and facts.